Is it good? Is it bad? Does it come with a lot of compliance? Why does everybody say that I should be an S Corp? We're gonna break it down today and make it simple and easy for everyone to understand. Come on in, pull up a seat, and let's talk S Corps. The first thing that I want to tell you guys is partnerships and side hustles need to be aware of the self-employment tax. It has many names, it's the same thing. Self-employment tax, FICA, Social Security tax, Medicare tax. All those are basically the same thing. The self-employment tax is essentially Medicare and Social Security added together. So you get 6.45 roughly, and I think it's like 2.9. You add those two together to get 7.65. You multiply that by 2, that is self-employment tax. Because if you're self-employed, you have to pay your portion of self-employment tax on the employer and the employee. So roughly 15.3%. If I got my percentages wrong, assuming FICA tax is basically Social Security tax and Medicare together. That is FICA. So whenever you see your paycheck, whenever you see Social Security and Medicare taken out of your paycheck, that is FICA. Those added together are FICA. You multiply that by 2, that's self-employment tax. So it's very important that we know those different variations in terminology before we get started. Why in the world do you need to be aware of these taxes? Well, partnerships and side hustles pay self-employment tax on their net earnings, while S corporations don't. They only pay self-employment tax on the owner's salary, which is controllable. So what exactly does that mean? It means that if you elect for an S Corp, so you can be an LLC, you can elect to be taxed as an S corporation, you have to pay yourself a reasonable salary as an owner. The reasonable salary is how the government, basically the IRS, still collects its taxes for Social Security, Medicare to fund benefits for the elderly people in our country that are deserving of those. We think of the working class is paying a portion for the people that have already put in their time over here, and that's how Social Security is funded and Medicare. Essentially, the IRS takes a position where, okay, fine, we see that you're an LLC or a partnership and you're gonna be taxed on the net earnings are gonna be subject to self-employment tax. If you elect as an S corporation, the net earnings are not subject to self-employment tax. However, we are gonna make you pay a salary. Why? So that they can collect their self-employment tax. That's essentially what it is. However, the key distinction is, if you have a net profit of $100,000, roughly $15,000 of that's going to self-employment tax. If you tax as an S corporation, instead of paying the 15.3% self-employment tax on $100,000, you only pay the self-employment tax on your salary. And you can set your salary, like a reasonable salary is gonna be something that, imagine if you were running your business and you removed yourself and you were gonna hire someone to perform your duties. What would you pay them? What is a competitive market rate that you would pay them? That is essentially what reasonable compensation is. Some people will try to overcomplicate this, and yeah, there are pros and cons, but guys, it comes down to essentially one thing. How much money are you gonna save on self-employment tax? That's really the only reason you do an S corporation. This is a great tool to use for high earners in specific fields that, like marketing and agencies, anything that doesn't really require a lot of equipment or debts, the things that are not, I mean, obviously there are situations where S Corp are still good for those businesses too, but there's so much other things we can do with tax depreciation and retirement plan. There's always other stuff that we can do. But for the bare bones businesses that are very simple and they're high income earning businesses, the S Corp is really one of your best options. And you can use in conjunction with retirement planning, which I've covered in another video. I actually created a calculation for you guys. So back to the $100,000 example. Let's pretend $100,000 as a side hustle. It's not an S corporation. $15,000 in self-employment tax, plus your ordinary income tax. So there's 2 taxes there. So your ordinary income tax, like on your taxes return, plus the self-employment tax. It's not necessarily double taxation, but that's not all the tax you're gonna pay. If you elect an S Corp with the same earnings, You can pay yourself a reasonable salary of $50,000 and you're gonna save 7.5. So $7,500, boom, right off the top, you save it. And that's a continuing basis every year. So if your earnings are around the same money, you're saving that much in taxes roughly every single year. You pay a one-time fee and it's in perpetuity until the tax law changes or your business goes bankrupt or unfortunately you meet your demise. Those are the only three things that are gonna stop that tax savings. Second benefit is you get to avoid double taxation using an S corporation compared to a C corporation. So if you have a C Corp, you take out funds, let's say it's owner pay, but it's not ran through payroll. That's essentially a dividend or a distribution, right? You're taking money out of the business for your personal enjoyment, whatever. You are gonna pay taxes on that as a dividend. You get issued a 1099 dividend. That's the same as if Walmart paid you a dividend. That's how it's viewed, that's how it's taxed, that's how it works. And S corporations and partnerships, they can take distributions and pay zero tax. S corps and partnerships, they are not double taxed on distributions, unless, of course, it's an excessive basis. But that's a different video for a different day. The real benefit is immediate savings and self-employment tax. That's it. That's the main gist. That's the whole sales pitch of an S corp. Bare bones. C corporations don't pay self-employment tax either. They have to pay their owners, a salary just like S corp. So again, the government is going to get funding for those Social Security and Medicare payments one way or the other. S corporation is a good way to legally manipulate how much you're paying in for that, right? We've preached the good stuff. This is awesome, blah, blah, blah. Now let's hit the stuff that people don't tell you about, the cons of S corporations. It's way more strict and rigid on business arrangements, the allocations of income and expenses. So if me and Tom, if we form a business and I say, hey, Tom, I contributed all the money to this, so for year one, I want this portion of the expenditures because I lent money for those. You can make your partnership agreement pretty much as wonky and as complicated as you want, and it'll fly, right? As long as people sign on the dotted line and we have the agreement, we're good. Now, where it gets tricky with S corporations is you have to be strict on your accounting. And most businesses that are transforming from an LLC to an S corporation, they typically do not have good accounting. They do not have a true accountant that does their books, or at least a tax accountant that does their books that can tell them like, hey, your distributions are unequal, you need to fix that. You have too much distributions. What do I mean when I say that? I'm the 30% shareholder and my other partner, Tom, is 70%. Say we want to give a business distribution. We have our salary, we're making $50,000 per year on salary, me and Tom are, because we're following the rules, we're paying reasonable compensation. But we also want to get some of those perks of having a profitable business, a tax-free distribution, right? We'll call it a quarterly bonus as a distribution. Let's say the quarterly bonus is going to be $10,000. Me and Tom have agreed the business pays out $10,000. That's what we can afford based on performance and cash flow and our cash reserves. I can only get $3,000 of that distribution because I'm a 30% shareholder. Distributions have to be equal or allocated according to your equity percentage. Basically, it's a fancy term for you have to take money out according to how much of the business that you own. That's it. Where that gets complicated are businesses that have 10 or more partners and they don't have the proper accounting and they don't want to pay for it to make sure that it's right. And what eventually happens is the IRS comes along and they bust their S Corp election, preventing them from saving all the money on self-employment taxes because they wouldn't spend the money to monitor some of the things that can break your S Corp election, which is unequal distribution. I've seen situations where partners just don't want to abide by that. They think partner X gets a big head and they think, well, I deserve X, I don't care what the rules are. And fine, I can't make you do that, but I'm going to advise that you do. Instances where the IRS just came along and busted the S Corp and they reclassified the distributions that were taken and they made them essentially pay FICA taxes or self-employment tax, the Social Security and Medicare portion, plus penalties and interest. So that's not fun. Make sure you do it right the first time. Make sure you are in communication with your accountant and bookkeeper. It's easier if they're one, but anyway, it's a really critical point that you cannot ignore. Moving on. Payroll costs. If you're a business that's already running payroll, this is easy for you. All you gotta do is add yourself to the payroll, pay yourself a reasonable salary, boom, you're done. If you don't have payroll, you have to set up payroll. Companies will run it for you. They'll make the tax deposits. They'll file the quarterly and annual payroll tax returns. Believe it or not, yeah, there are payroll tax returns. It's not just, oh, well, how much salary am I paying X person, or we're paying this rate at this hours, boom, there we go. It's a lot more complicated than that. If you're not comfortable running your own payroll, hire a company to do it, or better yet, have your accountant run your payroll. A great program out there is called Gusto. Gusto, you can run single member S Corps. So S Corp's one owner, one employee. The owner's the employee, because you have to have payroll now, right? You can run it for like $50 a month, and they automate everything. I recommend it. All of my clients use it. That's what I would do if I were you. I hope that we've kind of uncovered the secrets of S corporations, why everybody loves them. They're different than partnerships and C corporations. And then also, what are some of the cons of S corporation? Hopefully this video is helpful. And if you have any questions about S corps or when you should become an S corporation, how do you do so, blah, blah, blah. We handle all that for you guys. So if you're ever interested, let us know, send us an email, reach out to us on YouTube, visit our website, get a consultation with us. We'd love to help. Subscribe and follow down below. Thanks, guys.